Hello, good morning, my dear students. Already we have seen 5 problems from the exercise under the chapter retirement and death of a partner. Now we can see the 6th problem from the exercise. 6th problem from the exercise. What if we are supposed to prepare necessary journal entries and revaluation account. For the revaluation account, necessary journal entries are 3. One for the profit item, second entry for loss item, and the third one is the excess profit or loss to be transferred to the capital accounts of the partners. These are the 3 entries we must pass. That is, one for profit item, second one for loss item, third one definitely there must be some excess of profit or loss, and that profit or loss must be transferred to the partner's capital account. So, for that purpose, we should pass the third journal entry. Okay, now we shall pass the journal entries. Dates, particulars, ledger folio, debits, and the last one is the credit. Yes, for journal entries. Problem number 6 in the exercise. Date, particulars, ledger folio, debit ₹5, credit ₹5. Okay, now Raman retired on 31st March 2019. Therefore, 31/3/19. We shall separate the profit items and loss items. First one, machinery is valued at 1,50,000. So, what is the actual value before preparing it? 1,20,000. It is given in the balance sheet. See above. See, for the preparation of revaluation account, we should go to the adjustments given under the balance sheet. From the adjustments, we should find what are the profit items and what are the loss items. Sometimes in some problems, the actual profit is given, sometimes the percentage is given, sometimes like this. What is the current value of the asset? It may be given. So we should compare the value of the asset in the past and at the present. Now we should compare the value of the machinery. In the past it was 1,20,000. Now it is valued at 1,50,000. Therefore it is a profit item. So machinery account data. machinery account debtor. Since it is a profit item, we are writing this as machinery account debtor. Then what else is given here? What else is given here? We should check that also. In that, what is actually the journal entry? We should listen to it very carefully and don't confuse yourself. And we must be very careful, as I said in the beginning. We must be very careful. We must be very careful. Okay, then the second one, value of furniture brought down by 10,000. So it is a loss item. The third one, provision for doubtful debts should be increased to 5,000. Value of furniture, the asset value is decreased, therefore it is a loss. And the third one, provision for doubtful debts should be increased to. When the asset decreases, it is a loss. At the same time, when the liability increases, it is again a loss. Be careful. When asset value increases, it is a profit. When asset value decreases, it is loss. When liability increases, it is loss. When the same liability decreases, it is a profit. You should bear it in mind. Asset, liability. Here, for the asset increase, it is profit. Value decreases, it is loss. It is just opposite for the liability. When the liability decreases, it is a profit. When the same liability increases, it is a loss. Increase is a loss. If you remember one for the asset, you can just take this as opposite for liability. Okay, machinery account, it is a profit because the value has been increased. Then the third one, provision for doubtful debts. Provision for doubtful debts is a liability. That provision has been increased, therefore it is a loss item. Then fourth one, investment of rupees 30,000 not recorded in the books is to be recorded now. I said already, there is some investment, but it is not written in the books of account. Now only it is found out, so it is a profit. ஏற்கனவே எங்கேயோ இன்வெஸ்ட் பண்ணி வச்சிருக்கிறாங்க, அது எவ்வளவு நாள் தெரியல, அந்த இன்வெஸ்ட்மெண்ட்டை இப்போ தான் கண்டுபிடிச்சிருக்காங்க. ஸோ ஆட்டோமேட்டிக்கலி யூ கேன் ரிமெம்பர் நவ் ஈஸிலி த unrecorded investment is a profit item. Therefore, investment account data. This both, this investment 30,000, here machinery, already it was 1,20,000, now it is valued as 1,50,000, the increase is 30,000. To revaluation account. $60,000. Increase in value of assets recorded. Right. Then already Already we have seen decrease in the value of furniture and the provision for doubtful debt increased. These two are loss items. This profit item entry is the reverse. The reverse is the entry for loss item. What is the reverse? Revaluation account data. To the loss items. What are the loss items? To furniture account. To furniture account. To provision for doubtful debts account. To debts account. In this, furniture value is brought down, that is decreased as 10,000. And the provision for doubtful debts is increased to 5,000. I told you in other classes. The statements are given with the preposition, with a play in preposition. When there is increased by 5,000, you should take the entire amount of 5,000. Be careful. It is increased by 5,000, it means the total amount 5,000 has been increased. But when there is increased to 5,000, you should remember, when there is to, there should be some term from. What is from? Provision for doubtful debts 3,000, from 3,000 to 5,000. Therefore, increase is only 2,000. They play with words, sometimes you must be very careful. Therefore, this credit amount 12,000, so that also should be debited as 12,000. So, this is decrease in value of recorded value recorded. Now the total profit is 60,000 and total loss 12,000. Therefore, totally 48,000. 48,000 is the excess profit. Since there is a profit, what should be returned? That is revaluation account data. The three partners are Chandru, Vishal, Ramana. Data 2. Chandru's capital account, Vishal's capital account, to Ramanan's capital account. And this 48,000 is the excess profit that should be divided among the partners in the given ratio. What is the given ratio? Is there any ratio given in the problem? No ratio is given in the problem. But there is a condition given. Chandru, Vishal, Ramanan are partners in a firm sharing profits and losses equally. So, this 48,000 should be divided among the partners equally. What does it mean? 1:1:1. Total 3. Therefore, 1/3 into 1/3 into 1/3. So, it is 16,000. and each and every one it is 16,000. 16,000. Then for the third partner also it is 16,000. And revaluation profit divided among the partners or shared by the partners. Divided by partners. Shared by partners or divided by partners, this is. So, from this, what you can find? First journal entry for profit, second journal entry for loss, third journal entry for when there is some excess profit, this one. When there is excess loss, this entry will be reversed. And how we can correlate? For the profit item, items to revaluation. For the loss items, the reverse, revaluation to the loss items. How will you write the profit, excess profit or loss transferred to the partner's capital account? If there is excess profit, the capital account will be on the credit, revaluation debit. When there is excess loss, this capital account will go to debit and the revaluation account will be on the credit. You must be very careful in it. The other part of this question is revaluation account. We should prepare the revaluation account. It is named as account, it is a ledger. Revaluation account. Since it is an account, it is a ledger, so debtor, creditor. I remind you often because there are some points which you are usually missing in the paper. So I remind them often, listen carefully and don't miss it in the examination paper. Particulars, rupees. I am stressing some points and they are not very important. Even if in this writing debtor and creditor, it is not a grave mistake. But when this will carry its own effect, when you are awarded full marks, say for example center, they will check all these things. They will find somewhere where the mistake is and reduce the mark. And therefore, if you write that correctly in the correct format, we need not worry about it. That's why I am just reminding you these things. Then, what we must write? In revaluation account, write the profit items on the credit side, that is by machinery account. 30,000. By investment account, by investment account, 30,000. And loss items on the debit side, loss items to furniture account, 10,000. to doubtful debts account. 2000. So we can now close the revaluation account. Suppose if you are asked to prepare the revaluation account straight away without the journal entries, you should write all the credit items on the, all the profit items on the credit side, loss items on the debit side. So the credit total is greater 60,000. This total is smaller and therefore write the greater total on both the sides. The balancing figure is 48,000. And this 48,000 should be divided among the partners, that is to revaluation profit transferred to who are the three partners? Chandru's capital account, Vishal's capital account, and the third partner is Ramanan's capital account. Ramanan's capital account. So that is each 16,000, since they are equal partners. Right. This is the revaluation account. Once again I repeat it. A revaluation account is asked to be prepared separately without the journal entries. You can write all the profit items on the credit side, loss item on the debit side. If the loss is lesser, you can write the revaluation profit transferred to and write it. If the loss is greater, in that case, what you can write there by revaluation loss transferred to the partner's capital account, like this. That's all.